Welcome back, and in our top business story, the UAE's business activity growth in the non-oil private sector slowed in September, with jobs growth falling to a 6-month low. That's according to the Emirates NBD UAE Purchasing Managers Index, which covers manufacturing and services. The index fell to 56 points last month from 57.1 in August, where the 50 mark separates growth from contraction. Data showed higher output and new orders as the main drivers of growth for September, while the rate of hiring eased to a 6-month low at the end of the third quarter. Additionally, growth of total new work was undermined by the first drop in foreign orders since May 2010. Officials were quoted as saying that the strength of total new order growth is particularly encouraging, given the weakness in export orders last month, which underlines the strength of domestic demand in the UAE, even against a backdrop of low oil prices. Some companies attributed weaker new business from abroad to greater competition. UAE non-oil private sector firms also reported ongoing cost pressures in September as total input prices rose for the 6th straight month. The rate of inflation was the steepest in almost a year, driven by higher salaries and purchasing costs. Etihad is launching its Airbus A380 service to New York ahead of schedule. The Abu Dhabi carrier was originally due to start the service to John F. Kennedy Airport on December the 1st, but has now decided to change the first flight to November the 22nd. According to a statement, the updated arrival date and additional capacity for the A380 service comes in response to strong demand from Etihad Airways guests who are traveling during the US's busy Thanksgiving holiday, as well as to attend the 2015 Formula One Abu Dhabi Grand Prix, which is taking place from November the 27th to the 29th. The airline added that the A380 will replace one of the existing Boeing 777 services and will provide a daily service between the two cities. Dubai SME has doubled the loan limits available to Emirati entrepreneurs under the Mohammed bin Rashid Fund for SME from 500,000 dirhams to 1 million. The fund looks to help maximize funding solutions for Emirati entrepreneurs, and the extended loan limit will be available from selected banks in the country and guaranteed by the fund for up to 80%. Abdul Basit Al-Janahi, the CEO of Dubai SME and the managing director of the fund, was quoted in a local daily as saying that the financing limit was doubled due to the increasing demand on free interest loans and the scarcity of financing solutions that support entrepreneurs to incorporate innovation and technology into their businesses in line with smart digital solutions and to provide stronger presence in the market and increase their competitiveness. The fund will monitor the funded projects through reviewing its business reports and field visits, as well as offering advice to entrepreneurs as and when needed. GCC governments are reviewing existing models of both public and international pension funds in order to make sure that they can cope with the retirement needs of residents. That's according to the latest report. EY's GCC Wealth and Asset Management 2015 report reveals that asset managers expect a shift in the retirement ages of GCC nationals and changes in the end-of-service benefit schemes to make them more relevant to the actual retirement needs of expats. Officials were quoted as saying that there are two big issues. The first is the sustainability of public pension funds for nationals, given the relatively small size of the funds, demographics, and the gap between contribution and benefit levels. Secondly, there is a growing recognition by many employers that end-of-service benefit payments received by expats are neither adequate or suitable as an alternative to a pension. Public pension funds in the GCC are worth $397 billion, representing nearly a quarter of gross domestic product and $15,000 per national. They added that to address concerns, Gulf countries will have to re-look at the retirement ages, benefit levels, and contribution requirements.